Hello guys, how are you guys doing? This is FX Bright, the trade guru. So on this video, I'm going to be showing you guys how to trade the simple patterns with precision. Like this video is going to add a lot of value to your trading and significantly. So please like and subscribe and turn on the bell notification. So I'll go straight into it. Permit me to bring out a certain tool. So guys, listen. What you will understand from the market is that the market moves in waves, right? If the market wants to get from one point to another, the market moves in waves such as this. But you will notice something that in this wave pattern, there are certain structures that will be forming around the market. So one of those patterns that I want to be talking about in this video is the M structured pattern. So what you will see with the market is that the market will go up. What you will see with the market is that the market will go up, it will come down, it will go up, and it will come down again and give you this kind of pattern, which is the M structured pattern. So in the reverse case, the market might be coming down, then it will go up, then it will come down, then it will go up again. So giving you this kind of pattern, which is the W pattern. So you see that the opposite of the M structured pattern will be the W pattern. And I'm just going to go, I've done a video about this, so you can go check my videos to find out this type of pattern. But I'm just going to go quickly because there's something I want to show you. So like I said, the market goes up, it comes down, it goes up, and it comes down again. Now, once the market is on its way down, how people trade this type of patterns, if at all they know how to trade it, is that they look for a breakout, right? So this particular point where the market bounced and went up, as the market is coming down again, any day the market breaks this particular place, what you're going to do is that you wait for a retest on that same line, then take a sell trade so the market can fall down. So you can see the whole chart looking like this. So this is how it looks like. So the market went up, came down, went up, came and broke that place, goes up for a retest. Then at this point is where you take the sell and drop. Now this is the conventional way of how people understand how to take this market. But I want to show you guys how to take this stuff like a pro and be very, 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 very accurate. And I've discussed how to take this one in my other videos, which you can go check out. And this is very also profitable. Right, so but this is what I want to show you. You have to understand that to be very profitable in the market, you have to work with precision. You can assume. You can assume, but you want to assume with a high degree of probability, right? So I use the Fibonacci to try to get the precision of what I will call an M structure. Right, so I'm going to go straight into the chart and show you guys what I'm talking about. So, all right, so I'm just going to open the chart here. So I want to show you guys something. For instance, this is you can see an M structure that formed in this particular place. You can see how the market went up, came down, went up, and came down again. Right, so these kind of this is obviously a very, very clear definition of what you call an M structure. So now, how do we trade the M structure? Like I told you guys, initially how people would like to trade this M structure is that once the market goes up, come down, goes up, it comes down again, then you will wait for the market to break this neckline, which is this particular support zone that bounced it off. As the market is coming down, it's going to break it, make a retest, and sell again. But you can obviously see that on this particular trade, the market didn't really do that. So while that is a good way to take the trade, you might obviously miss out on some trade because the guys that didn't take this trade waiting for a retest on this line will probably miss out on this particular move and didn't take the trade. So I'm going to show you guys the best way to take the M structure. So please, like I said, like and subscribe to this video so you can encourage the channel, okay? So look, the first thing you want to do is determine whether this neckline is valid. Now, the way I do that is, for instance, let's assume this is where the market is. The market was going up and, normal going up, come down, go up, come down, whatever, right? So the market went up and came down. right? So at this point, at this particular point, there is no way to know that this is going to be an M structure. How do you know? Let's forget about this whole side. Just focus on this side. Let's assume this is where the market was, yeah? So there is no way to know that this is an M structure. You just have to be patient to see what is happening. So now, as the market kept going up, right, I'm thinking maybe it's going to be an M structure, or maybe it's just going to keep flying up. Either ways, let's see what happens. So what I see on this particular candle is that the market comes down, right, and gives us this red. So I'm thinking, oh, what's going to happen? Is this going to be an M structure that I can trade all the way down? All right, so what I want to do is, what I'm going to do at this point is that I'm going to validate this neckline. Right, I'm going to take my Fibonacci, and I'm going to draw the Fibonacci from the bottom. I'm going to make sure it's touching the bottom of the impulse leg all the way to the top of this first leg. Remember, now I'm just dealing with the first leg of the M, which is from here to here. So this first leg is often called the impulse leg, right? So the impulse leg. So I'm going to take that measurement, and I'm going to make sure that this place, this neckline, this middle point of the M is called the neckline. So I'm going to make sure that this middle place, which is the neckline, falls in between 38.2 Fibonacci and 61.8 Fibonacci. What I'm saying is that no candle must close below 78.6. I will not take that kind of M. I will take the only M's that close around 61.8 Fibonacci, 50 and 38. So this one fell in between, inside the 38.2 Fibonacci ratio. So I will be taking this one. So I will consider this a valid M neckline structure. Remember, I still don't know if this is going to be an M structure, but at least now I can confirm that this neckline is valid for an M. So when the price kept going up and now start coming down, now my spidey sense, or whatever you call it, will begin to become alert. I'll be like, okay, maybe there's going to be an M structure. Remember, I told you what most people would do is that they will wait for the market to come down, break this neckline, come down and make a retest before they buy, before they sell, sorry. And you know, sometimes this doesn't just happen. So there's a more accurate way to take it, which I'm showing you right now. So as the market kept coming down, the next important thing you want to do is to validate this particular leg, right? You're going to validate now. I'm showing you how I take this trade, right? And guys, you can take this on Forex, crypto, whatever it is you're trading. This information will help you. It will blow your mind. All right, good. So on this particular leg, you can take, you're going to validate this leg. So how do you validate the leg? Let me shift this Fibonacci so that this place can become, oh, I'll just probably delete it. I don't need it again. So I've already validated this neckline. So I want to validate this particular leg. So what I'm going to do is I'm going to bring out that same Fibonacci. This time around, I will draw the Fibonacci from this top to the neckline. I'm going to draw it from the top to the neckline. Right, good. So I'm going to draw it from the top to the neckline. Now, what I want to see from this particular place is that I will ensure that the candle does not close above 131 Fibonacci ratio, right? This is the 131 Fibonacci. You can see it. Let me shift this stuff a little bit. So you can see that top place is 131, and the market just got right to it and started coming down. I want to ensure that no candle closes above 131 Fibonacci. If not, I will not consider this a valid M structure, right? So immediately I've been able to get this place, validate this place, and validate this place. And I can now see that the market has started coming down. I will now do the last thing, not the least, but the last thing to validate this for my entry is I'm going to come down to the bottom of this first leg, and I'm going to pull out the trend line, and I'm going to draw that line, right? I'm going to draw the line to touch these and these, and I'm going to put it like this, right? So you can see this trend line I drew. So the moment the market started coming down, I'm going to wait for the market to break this trend line, make a retest on the trend line, and on this particular retest, when I see the next sell candle, I'm taking my sell because I've been able to validate the neckline, validate this leg, and the market broke this trend line, makes a retest. My sell here is imminent. So guys, let me tell you, you can't go wrong trading like this. Believe me, you can't go wrong trading like this. Listen, like and subscribe on this channel. I'll be giving you very valid information that you ought to pay money for, and I'm giving you out here for free. So guys, this is how you do it, right? So how do I take my take profit? Now, how I like to take the take profit is I'm going to pull out the Fibonacci again, so you can see how powerful this tool is. Very, very powerful tool. And I'm going to take a sell from this particular point, wherever the retest is happening from, and I'm going to take the sell all the way to 161,786, and if I can hold the third position, I will hold it to 88.3. So you have to be able to manage the trade. So immediately you're able to get your first TP, second TP. If you have a third position, you have to bring the SL to break even. You will always be in profit in this type of trade, guys. Listen, I'm not kidding you guys. So let's try to find more trades. Now you can see this one that happened here. You can see like an M structure that happened. You see how the price went up, it came down, went up again, and came down. Like I said, we have to validate this neckline and see what it was. So I'm going to pull out this and I'm going to draw this all the way to the top there. All right, good. So you can obviously see that this one was very good because it touched the 38.2 Fibonacci, right? So I've got the middle correct, which is this neckline. The neckline looks very good. So I'm going to delete this one again. Then I'm going to obviously confirm this third leg here, this leg. And how do I tell you? I'm going to pull out the Fibonacci again, and I'm going to draw from this point to this point. Obviously, you can see it ended at 88.8, and I told you that it must not go above 131. It must not go above 131, and it must not be below 161, okay? In other words, this leg cannot go and stop at 161. I won't take this type of M structure, right? So I want this leg to break 161, but does not go above 131. So 131 is still way at the top. So the moment I see that has happened, I see that the market is coming down. Like I said, the last thing you want to do is that you want to bring out your trend line tool. So you're going to put it to the bottom, and you're going to connect this bottom to the middle line, and you're going to just draw it to the top. Then once you draw it to the top, what you will be waiting for is for price to break it, make a retest. It's for price to break it, make a retest, and on this retest, once you see the next buy candle, the next sell candle, you're going to take your entry on this leg. So once you take your entry on this leg, like I told you, you're going to pull out your Fibonacci for your TP. If you draw the Fibonacci from this place to this place, I told you once you take that leg, you're going to hold to 161, 786, and 88.8. Those are the Fibonacci ratios. Like I told you, once you are able to get this tool, you can bring this 88.8, the SL, you're going to put it at break even, and you can be able to manage that trade. And you will always be in profit on your first, second, and most likely your third positions. Now guys, this is how to take this trade. This is how to be very profitable. I hope this video was able to become helpful. You can go on and do your back test on whatever market you're trading, and I'll see you guys in my next video.